Good day, ladies and gentlemen. In this particular video, I'm going to be teaching you a very powerful forex trading strategy. It's an ICT strategy, so you need to pay absolute attention. Okay, so this system I'm going to teach you is actually based on the fair value gap, but it's not like the usual fair value gap you already know. Okay, so we are going to be using the fair value gap a little bit differently. Okay, so this is early in the morning. You have to pardon my voice in case my voice is not very clear. You can hear the cock crowing in the background. Okay, so let's proceed. You already know that fair value gap is a three candle pattern, right? So you have three candles like this. So the wick of the first candle does not intersect with the wick of the what's it called of the third candle. So the wick of the first candle does not intersect with the wick of the third candle, and that gives us our fair value gap, which is the gap in between. But we are not going to be using this the normal way. You already know that the normal way to use fair value gap is, if it's a bullish fair value gap as you have on your screen, you wait for price to get back to this level and then you take a buy trade. Instead, what I'm going to be teaching you is the manipulation based fair value gap. Okay, so our fair value gap is going to be based on manipulation. All right, so we are trying to trade like the market makers. Okay, so I'm teaching you a system whereby while other traders lose, that's when you are looking to make money. I know how that sounds, but that's just how we are going to use the system. Okay, so you're trading like a manipulator. Okay, you are joining the market makers and the big banks that like to manipulate these markets, and you know when other traders are losing, that's when you're going to be making money. Okay, so the term for it is called fair value gap inversion. Okay, some people don't really understand how to use it, so I'm going to be breaking it down in this particular video. Okay, so how do you inverse a fair value gap? Once you see a bullish fair value gap, you already know that other traders are trying to take a long trade. Do not take a long trade. Your prayer should be for that fair value gap to fail. So you're trying to trade it when it has failed. When other traders stop loss is getting hit, that's when you're entering your own trade to move in the opposite direction. So if it plays out in the favor of majority of traders, then you are not going to trade. You are just going to wait. Okay, so when it fails other traders, that's when your own market condition is okay to engage. Okay, so what we are going to be doing is the difference between what I'll teach you in this video and what you will find out there is that I'll give you some extra details that makes inversion fair value gaps work that you won't find elsewhere. The general idea of an inverse fair value gap is that when market goes past it, if it's a bullish fair value gap, instead of buying, when market disrespects it, you sell. But there is a nature, which that market needs to use to disrespect it before you can actually qualify it as a good inversion fair value gap. And that's what I'll be teaching you in this particular video. Without further ado, let's get right to the examples so you can learn what you have to learn and go and start back testing instantly. Okay, so basically look at this. This is a bearish fair value gap. You can see that the wick of this candle, let me shade this a bit. Okay, so the wick of this candle right here does not intersect with the wick of this candle, leaving us with a bearish fair value gap. So a normal trader or a retail trader normally would want to sell when market comes back to this bearish fair value gap, but we are not going to be doing that. We are going to be praying for this fair value gap to fail, meaning we need bullish candles to go past it. So now this is the difference between what I want to teach you and what others do. Okay, others don't really care how this bullish fair value gaps go past it. Sometimes it could give you bearish candles in between. All they know is so long it goes past it, it's an inversion fair value gap. No, hell no. Do not use your inversion fair value gaps like that. You are going to lose. If you do that, you lose more than you win. Okay, you need to see an aggressive movement with the bullish candles, aggressively disrespecting the level. That is only when you should trade inversion fair value gaps. If price comes in here, let me take this away. um, if price comes in here and gives you a pullback like a bearish candle, then plays around and then comes out, I'm not trading it. Okay, do not trade such inversion fair value gaps. What you want to see is a straight up disrespect like this. Market should just go past it as if it does not exist. That is when you are going to trade it as an inversion fair value gap. Okay, and additionally, to give you a plus setup, if this bullish move can lead to a break of structure, then you have an A plus setup. If it does not lead to a break of structure, then it's just an A setup. You can still trade it. It's okay. Alright. But it's like A plus, elite kind of setup if it can break structure. Then when it returns to the level, you trade it as an inversion fair value gap. Okay. So basically you just wait for price to get back to that level. As you can see what it did right here. Tapped on it and pushed. Your stop loss will be a few pips below that level. You can target 1 to 2 or next draw on liquidity. As you can see, price pushed and cleared this external range liquidity. Very, very simple. So this is second example. Let me mark it out quickly. Alright, so you have that. What do you see happening? Aggressive break, no pullbacks in between, just moved across it as if it does not exist. This is what I want to see if I want to trade inversion fair value gaps, and this is what you should look for. Okay, so other mentors will tell you, so long it goes past, even if it plays, so long it goes past, it has been disrespected, so you can still trade it. No, you lose more than you win. You need a straight up disrespect like this. So market came back there, you can see see what happened. Market returned, retested it and pushed up. We would have gotten 1 to 2 from this particular trade. Okay, so let's see. This is also good, but I did not mark it as an example because market did not get back here. Okay, so if you check, you would see there's a bearish fair value gap right here. Okay, let me delete this one so you can see it. But market did not return to it. Market just kept going in the upwards direction, which is good. You did not enter the trade, so you didn't lose money. It's fine and good. So let me show you. There are fair value gaps here, but they were respected. So other traders would have made money with the normal fair value gap trading system. So look at this. So this is an inversion fair value gap also. Okay. Let's see. So this is a bearish fair value gap, and you can see what happened here. I wouldn't have traded this, even though it played out well. You can see market gave a little bit of a pullback as if it wanted to respect it and then pushed up. Nope, I'm not going to trade this. But let's see. You would notice that later played out well, but you have to follow the rules. Most times when it does that, it does not play out well. It's going to play out well sometimes, but not all the time. So let's just see if we did not take that trade. So let's see right here. I have a fair value gap right here, which is bullish, a bullish fair value gap. Let's mark it out. Okay, so look at this. I'm expecting bearish candles to disrespect it straight up without any pullbacks. See what happened here. I have a pullback, which is a bullish candle in between, and then price went down. So if you wanted to trade it directly, when price came back, you can see that it blew past it again, which is going to take your stop loss. So you trying to trade while other traders have lost money, you being smart, at the end of the day you are also losing money. So you have an idea of trying to trade like the market makers, but even you that have that market maker mindset, look at what happened to you here. You also lost money. Alright, that's why I'm giving you the extra tips that's going to set you apart, so you can be an elite inversion fair value gap trader. So someone like me, if I want to trade inversion fair value gaps, like I told you, so long it does not give me straight up disrespect of that level, I'm not going to trade it. You can see it played out well in the last example I showed you, but look at the way it messed up right here. So from experience, I've noticed that out of 10 trades, if it does not give you, aggressive break of that fair value gap, out of 10 trades, you probably win like 3. Okay, you win maybe 3 or 4. You lose like 6 or 7. So you're going to lose more if you're taking this kind of trades. So if you want to trade this, please let it be a direct break. Okay, there should be aggressive breaking. There shouldn't be any form of pullback inside your fair value gap. Okay, so this is another example right here. I have a bullish fair value gap here. Let me see, mark it out. Okay, so look at what happened. Price broke through it straight up. This is what I want to see. Then I'll set a pending order to enter instantly. So you can see this bullish candle retested it. Stop loss can be a few pips above this level, and then you can target, 1 to 2. As you can see, this would have given us up to 1 to 3. Okay, they have given us up to 1 to 3. So let me see if I can give you one more example. This should be my last example. I believe you already understand how this system works. Okay, so please, if you're getting any value from the video, subscribe to the channel. That's the only thing you do to encourage me to keep giving you these secrets. Okay, and remember, the 50% discount on my mentorship is still ongoing. Today is 20. I think it's about 10 days more to go, so we need to take advantage. Alright, so what we see happening here, I need aggressive break of this level, and I got just that. Okay, there was no pullbacks in between. Broke, I would have entered a buy trade on this bearish retest. Stop loss if you pips below this, target 1 to 2. Okay, so you can see the way price pushed in the upwards direction, so definitely I would have gotten 1 to 2, okay, from here, and I would have left the trade with profit. Alright, so if you got any value from this video, subscribe to the channel, turn on the notification bell. I'll see you in the next video. Thanks for watching.